Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. Much as Chicago and Kansas City wheat, this market had been the story of three patterns, though not necessarily channels and also not necessarily with the same results. I'll explain. The first pattern and the largest was the late June to early September bear channel that morphed into a descending wedge pattern. Then there was the early September to mid-October rising expanding wedge pattern, and finally the most recent, and shortest pattern, was the mid-October to mid-November bear channel that together with the expanding wedge pattern made up a V pattern, a V-top pattern. Now 4 weeks ago prices broke up higher outside of the bear channel with some interesting results, rising initially as far as a combination of the short medium moving average, currently at 231, and the recent March to May 50% Fibonacci line, also at 231, where the market was capped and gapped lower. However, the move back down did not exceed the earlier November low, though both were stopped by the same support, the 50% absolute Fibonacci line below at 219. This left behind potential targets below for the early September to mid-October rising expanding wedge pattern. 2 weeks ago I was beginning to wonder just how much bullish incentive there really was in this market, as prices were having issues with the then overhead short medium moving average and the 50% combination, 50% Fibonacci combination. Plus further overhead there were some significant resistances, specifically the dark blue neckline extension to the June to November 2023 head and shoulders top, currently at 238, and that 238 to 247 congestion area containing the March 2013 high at 240, the February 2013 high at 247, plus the newer October-based conjunction between approximately 237 to 245, so it's just slightly lower. And that was actually caused by the previously mentioned congestion band. Well, the resistances at 237 and higher are still there. I needn't have worried about the short medium moving average and the 50% Fibonacci combination, as changeover gapped prices higher last week and left us with two potential bullish patterns below and a destruction and retirement of any targets below. Meanwhile, the two bullish patterns I spoke about are the obvious late November to early December island pattern, plus a possible November to date double bottom pattern. This sort of ties in with another pattern I'd highlighted back in November, a bow tie formation of the moving averages made 4 weeks ago. From the short moving average, currently 229, the medium moving average, currently 227, and the long moving average, currently 231. The moving averages went in and out of the bow tie in the right order, but whilst the way in looked a clean move lower, the way out has been messy, and as I said last week, and I quote, even starting to look higher, end of quote. Further stand by what I said last week, and I quote, reserving my judgment on this part, but I suggest that approximately 15 to 20 sessions after the crossover, look to see some volatility in prices and maybe direction. So watch out between the 16th to the 20th of December to be sure, end of quote. Well, even before the 16th, though admittedly due to changeover, we have seen prices follow that even starting to look higher point. But we are on some interesting pattern today, possibly a topping pattern for this week. The latest gap higher sets up a primary potential topside target X2 in the 241 area, with a secondary harder to reach topside target X3 up in the 245 area. We also have the island pattern below, which gave us a potential primary target X4 up at the 236.5 area, and the secondary target X5 up at 238. Both of these targets X4 and X5, have been achieved. This still leaves target X2 and X3 topside, and they are increasingly becoming remote. Now, the one pattern that has suffered in all this has been the late May to mid-October bearish shift pitch. I thought 2 weeks ago that the now broken upper tie, currently at 228, might provide another level of resistance overhead. Well, it hasn't. Last week I threatened to retire this pattern, and this week I thought about it, but I will give it one more week, as it seems the gapping action seen last week may be getting filled, and I'd like to see how the market will react to the upper time if that happens. Minneapolis wheat. The market here had been a little different when compared to Chicago, Kansas City, and even Paris wheat. You see, for many months now, the core recent pattern is a very large one, a sideways expanding wedge pattern highlighted in dark blue on my daily chart, currently 545 to 705. This pattern is still alive, though not without incident, and there is also a much larger pattern as well, one I've been discussing in my commentaries for months now. I think it was the beginning of the year I started talking about this. A descending expanding wedge pattern, currently 631 to down well off the bottom of my daily chart. The upper trend line has been escorted and reinforced since at least late last year, though not very well I have to say, by the declining long moving average, currently 642. I've kept this breached, large, original descending wedge pattern still on my daily chart, as the others that were here originating from August, September and October 2023 through to April 2024 have all been thoroughly broken, and this, the largest one, is still here, even if it was previously breached as a just-in-case situation. Going back to the market action, prices turned higher from a small V-bottom in late August, prompted by the breached purple highlighted September 2019 to date uptrend, currently at 600, into an early September, mid-October, scrappy looking, ascending expanding wedge pattern. Unsurprisingly, this peaked in mid-October and was capped by the combined upper trend line to the expanding wedge pattern. There was also the neckline to the inverted February to June head and shoulders continuation pattern, thus turning low and creating a bright red October to early December bear channel that did not quite have the integrity here for a V-top, as seen in other grain markets. This bear channel, despite some other grain markets heading higher, maintained its integrity until late 2 weeks ago, when just by sidling sideways, prices exited out of the top of the bear channel, along with the breached purple September, along the breached purple September 2019 to date uptrend. Even now, some 5 weeks after testing this breached uptrend, the market has not stabilized below it. As a consequence, we still have left out there the secondary hard to reach target X1 for the September to October based small ascending expanding wedge pattern, which is down at 563 at the low of August, very much hanging out there on its own. I'm still as yet not minded to retire this pattern, not just yet, despite prices stabilizing over the bright red downtrend. This week I finessed and retired the late May to mid-October bearish Andrews pitchfork into a bright green bearish shift pitchfork for the same move, as it is a shallower if still bearish pitchfork and it is a better fit. The market is right now in between the overhead bright green upper time, and that's currently at 620, and the middle time below, currently at 547. Now there's one new pattern, a potential pattern, that I'd like to introduce this week, and it is that we are set up for a weekly key reversal here, much as we are in a number of grain markets. Thus, if we close tonight either over 599 or under 596.5, then we'd be on. Anything in between to have a lesser outside weak pattern. Right now, we are just barely looking at an outside weak pattern, bordering on being a weekly key reversal down. It's coming down to the wire on this one. London UK feed wheat. There continues to be now only one major significant pattern on this daily chart, and that is the bright red late May to early July bearish shift pitchfork. The market is right now between the overhead upper time, currently at 185.95, and the middle time below, currently at 168.15. Despite other mainly bearish patterns, this bright red one has been gently maneuvering prices lower since early July. Additional to this, we have overhead, on occasion, all the moving averages, with the long moving average currently at 181 3/4, just above the overhead 50% absolute Fibonacci line at 180.5, and a September 2021 low overhead at 181.70, plus the now dipping short medium moving average currently at 181.40, and the slowly declining and significant medium moving average currently at 182.95. A little further up that is. Below the market, well, we have the recent March to May 50% Fibonacci line at 178.25. There's not much until the November and late August lows at 174 even and 174.65 respectively. This leaves what I said 4 weeks ago still in the frame, and I quote, So looking at the early October actions, what may turn out to be the key feature was the island top over early to middle of October, potential target X below in the 169.90 zone. This island top led to the October to mid-November bear channel, which we exited out of the top of, though not necessarily that convincingly. I voiced some doubts about the bear channel the last few weeks, but I also said I would go with it until something better comes along. I'm now looking for that better move or pattern to appear. End of quote. I am still, even now, still looking for that better pattern to appear. Until that shows up, I'll continue utilizing the bright red bearish pitchfork, which leads me to my final point. Elsewhere, we have set up this week weekly key reversal opportunities in the grain market. Here, with just a single data point each day, I will not know if this comes about until today's close. But in anticipation of that, should we have today's data point at or below 178.70, then we would have set up a weekly key reversal here for this week. This is something to watch out for today. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftbeek and ADM Investor Services International Limited. And here comes the final important bit.